Hi, I'm Frank Hugelmeyer, and I'm President and CEO of the National Marine Manufacturers Association and the President of the New York Boat Show. And you are watching Taking Stock.
2 minutes to go here into the close. We are expecting record high-setting territory finishes for both the New York Stock Exchange Composite Index as well as the S&P 500. Not quite at that psychological level of 7,000, but getting quite a bit closer right now. It's 69.79 with about 90 seconds to go left into the end of the tape. Technology, utilities, and energy, those are your strongest performing sectors in the S&P 500 on this Tuesday, January 27th. Losses to the downside in today's session here on the street, led by healthcare, financials, as well as telecom. Healthcare stocks are really in focus. We'll talk a lot more about names like CVS, Humana, United Healthcare, and more coming up in just a bit. Consumer confidence reaching its lowest level, going all the way back to 2014 from the conference board, also somewhat on the top of minds of investors today. And today, January 27th, marking 1 year since the DeepSeek AI-fueled sell-off. Remember that one, Michael? 1 year ago today. The great Michael Reinking's on deck from the NYSE. He'll join us here on the show right after the closing bell to get his take on today's tape. Welcome to the broadcast. You are watching Taking Stock. I'm your host, JD Durkin, just a few moments away from the ringing of the closing bell here at the New York Stock Exchange. International Holocaust Remembrance Day. We got the teams from Fiverr and March of the Living set to do the honors, and they will join us here on the broadcast in just a bit. We will pick up following coverage for how the tape finishes on this record-setting day for the S&P 500 and talk with the great Michael Reinking. But before we do that, time for our favorite tradition, the ringing of the closing bell. And your final tale of the tape on this Tuesday, January 27th, a fresh set of all-time highs for the NYSE Composite Index as well as for the S&P 500, closing at 69.78. The Dow, however, down 0.8%. That's because your most weighted names, price-weighted that is, not market cap, of course, with losses, including Goldman Sachs, Amex, and UNH we talked about there a moment ago. And the small caps holding on to gains up about 0.25%. Michael Reinking is a good friend of ours here on the show. He is the senior market strategist at the NYSE. Thanks for being here to kick off the broadcast.
JD, thanks for having me.
I do want to talk about the dollar reaching the lowest level in 4 years. It fell as low as 96.13. What is that telling you either about investor confidence right now or a lot of other factors we're following?
So we actually got some comments from President Trump just at the end of the day, which I added to that downside, right? Where he basically alluded to the fact that he didn't think the dollar weakness has been too much, and he actually, in his own Trumpian way, said he didn't mind the dollar going up and down like a yo-yo. So that was sort of interesting. Not something you typically hear, kind of in terms of policy. Look, the dollar weakness has kind of been an ongoing theme that we really started to see kind of earlier last year. There are multiple different factors kind of weighing on the dollar, right? We're seeing kind of interest rate differentials start to kind of narrow, right? But we've also seen this idea of kind of this de-dollarization, kind of after some of the Washington policy where kind of investors and central banks are looking for non-dollar assets after you saw sanctions and things of that nature. Right, so it's something that's been kind of ongoing. We did see a little bit, kind of an acceleration to the downside after there were some reports last Friday that the Federal Reserve was doing a rate check with banks, suggesting that there could be some intervention, especially as it relates to the Japanese yen, right? But it is a pretty widespread, kind of move for the dollar. It's not just the yen, it is pretty widespread across currency crosses.
You mentioned the central bank. Happy Fed Day Eve to all who celebrate, which, trust us, is all of us down here at the big board. 2 o'clock decision. I think it's pretty baked in at this point what to expect, but 2:30, one of Jerome Powell's last press conferences as chairman of the Fed. What are you going to be listening to?
Yeah, look, I think, at this point there's not a whole lot of drama as it relates to monetary policy. Markets have pushed out the expectations, for the first Fed rate cut this year to come kind of in the middle of the year, right? That's back from kind of early, kind of Q1 when we coming into this year. I think kind of the big topic that kind of the press will push on is the most recent investigation by the DOJ. I don't necessarily think that Chair Powell will kind of really bite on that. We'll be looking for some more commentary around kind of the balance sheet, which they've kind of started to rebuy treasuries again. So that's something kind of markets will be paying attention to. And then the one curveball that you could possibly get on a Fed day is we're waiting for President Trump to announce Chair Powell's replacement. Right, that would be kind of interesting if you actually got the announcement tomorrow. Maybe 2:30. Who knows? That would be the big curveball of the day.
Coincidentally, yeah. But Powell is a very disciplined messenger. I don't expect him to take the bait on inevitably those questions, even about the Lisa Cook dismissal case in front of the Supreme Court. There's a lot of drama outside of the lane of pure monetary policy. As if all of that weren't enough. This time tomorrow, Microsoft, Meta, Tesla, we really kick off the Mag 7 earnings. What are you going to be looking for? Is it CapEx? Is it spending strength? There's so many metrics to point to.
Yeah, so look, I think for every company it's a little bit different, right? And the setup this quarter is also different than what we've seen for much of the last year, right? Where one of the indexes that we like to pay close attention to is the NYSE FANG Plus index, right? That index is actually kind of been underperforming. So if you look, it topped out in October and it's down about 7%, kind of since kind of Halloween. All right, and it just tagged its 200-day moving average last week, right? So a lot of those stocks have been underperforming. Now they've bounced over the last couple of days, which is some of that rotation that we've been seeing, right? So for the start of the year, everybody talked about the broadening. We saw the Russell 2000 outperform the S&P 500 for 15 consecutive days, the longest streak going back to the mid-1990s, right? That's reversed as of Friday. We're now seeing kind of those mega cap tech names coming back into, kind of coming back into that leadership position for the last couple of days, right? And then, we have the earnings tomorrow night, which are going to really set the stage.
Absolutely. Okay, the great Michael Reinking, senior market strategist here at the New York Stock Exchange. It is really great to have you, Michael. Thanks a lot for being here.
Right, thanks for having me.
I will grab your mic. Howie, you and I are going to hang right here, as a matter of fact, and I will bring our viewers some updated earnings from the team at UPS we got this morning. Pare back some of their gains despite reaching as high as 4% in the session. UPS reporting $2.38 a share, more than $24.5 billion in revenue. Howie, why don't you take a step forward with me this way, if you don't mind? The company reporting strong U.S. ground performance for the holiday quarter, though company CFO Brian Dykes announcing UPS is set to cut up to 30,000 jobs here in 2026, also end that long-running partnership with Amazon. We'll now bring you the latest on two NYSE notables that you need to know going on this trading Tuesday. First up, UNH dragging down other key healthcare names. That includes Humana, CVS, as well as Elevance Health. This is all because the Trump administration is proposing to keep Medicare Advantage rates essentially unchanged, up 0.09%, and so it's dragging down these names that are really reliant on Medicare Advantage revenue. More than 33 million Americans currently enrolled in Medicare Advantage plans. We will watch the performance of the tape of those stocks very closely. And finally, let's end with a look at General Motors, great American legacy brand, reaching a fresh all-time high on the day of $87 a share. A slight miss on revenue, but a beat on earnings for the quarter reported today. $2.51 a share, raising its 2026 profit outlook, boosting its quarterly dividend, and announcing a $6 billion buyback. GM shares now up 6% already in 2026 and up almost 60% over the last 52 weeks. We have a very special edition of Taking Stock coming up after a short break here from the New York Stock Exchange. Do not go anywhere. Welcome back to the show. You are watching Taking Stock live from the trading floor of the New York Stock Exchange, and it is our distinct pleasure and privilege to say Holocaust survivor and educator Nate Leipciger joins us now here under the iconic closing bell. Mr. Leipciger, it is a great pleasure to have you join us today. Thank you for being here.
Thank you for having us. It's an honor for me to be here. You know, 81 years ago, 82 years ago, I was standing in front of the gas chambers and crematoria in Auschwitz-Birkenau. And I was standing there looking at the stubby chimney, and ash and flames were coming, spewing out of it. And with it were my family's souls were going up into flames. That was the most devastating moment of my life. And today, being here, I have to juxtapose that time, that element, with what we're staying here today at the organization that's the pinnacle of the Western culture. And I'm very happy to be here. It means an awful lot to me.
What would you most want people to know about Holocaust Remembrance Day and why this is so important to you? The message you most want people to take away?
The message that is important because it is the remembrance of the people who were murdered for no reason other than the fact that they were Jewish, that they were born Jewish. That was their crime, and the responsibility of this organization and the world generally is to remember what happened so that it never happens again, not to us or to any other people. And you are very well, you are the symbol of our free world, and I'm very happy that you asked me to be here.
Again, it's a great pleasure and a unique privilege to really have you here live on the show. So many amazing people, friends and family are around you here today. You're doing this in partnership with March of the Living,
yes,
as well as Fiverr.
Yes.
These are some tremendous tech companies. What is the business angle that helps to empower something as important as remembering Holocaust Remembrance Day?
I think that the industry, especially the electronic industry today, and AI, is at the driving edge of our economy, and it is very important that the community, that the business community realizes that it not only does it have a privilege and power, but it has responsibility. And the responsibility is to the world to make sure that justice and equality and love is promoted over hate.
To acknowledge Holocaust Remembrance Day today is one thing. To do it all year long is a different challenge.
It
As
is a
people
challenge.
listen to this interview, what more do you want them to take to heart the rest of the year?
To do it, to remember that denial of Holocaust means to re-murdering of the people who were lost. And I think it is important that we remember that every day is a day, as you said, to remember. And every day we must look forward, because just as the bell just announced the end of one day, tomorrow is another day, and we have to go on, and we have to fight every day from anew. And that's what I had to do when I was in a concentration camp. Every day was a new challenge. Every day depended on hope. And if I'd lost hope, we would have been gone. But today I have all kinds of hope, because I'm here at this wonderful institution that is, making sure that the free world is moving forward and it's flourishing.
Nate Leipciger, thank you so much for taking the time to join us here at the New York Stock Exchange. Very nice to have you, sir.
Thank you. Thank you for doing it.
We'll take a quick break. Much more Taking Stock coming up from the NYSE after this. Welcome back to the show. You're watching Taking Stock here from the New York Stock Exchange. Time now to give you a few headlines you need to know in the world of startups, raises, and rounds. First up at this hour, tokenization firm Superstate, led by DeFi pioneer Robert Leshner, raising more than $80 million to move IPOs, shareholder records, and trade settlements onto blockchain rails like Ethereum as well as Solana. Next up, legal AI startup Evo scaling fast, raising $55 million in a Blackbird-led round as corporations turn to AI in order to speed up contract reviews and cut down on legal costs. And finally, AI chip startup Recursive, which uses AI to design and improve its own chips, is raising $300 million at a $4 billion valuation just 2 months after the company launched. We now bring you part 2 of my one-on-one sit-down with legendary CNBC financial news broadcaster Bob Pisani right here from the New York Stock Exchange. Take a look. Bob Pisani joins me now here on the trading floor of the iconic New York Stock Exchange, making his return once again to the big board where he has worked for many years. He is the author of the book, Shut Up and Keep Talking, Lessons on Life and Investing from the Floor of the NYSE. What an honor to have you here, and thanks for joining us.
Oh, thank you, JD.
You have studied and written a lot about behavioral economics. What is one surprising either development or trend about behavioral economics that you've learned from watching traders in action here all these decades?
Well, the big thing about behavioral economics, and I didn't realize this entirely when I got here in '97, I knew about it, but I didn't emotionally understand it. Behavioral economics purports to show how people really behave, not how they're supposed to behave. So in classical economics, people buy low and sell high. It turns out they don't do this. They buy high and sell low. Well, why do they do this? Why do they act what seems to be irrationally? And the answer is because there are impulses that people have developed that cause them to do irrational things. So, for example, people will hold on to losers way too long. And people will sell their winners way too quickly. Economics shows you that that's not a good strategy, but for various reasons have to do with hoarding, going back to the Stone Age, people will engage in that kind of activity. So all of a sudden, in the year 2000, Robert Shiller, the economist at Yale, came out with a book called Irrational Exuberance. And Shiller had become famous in the 1980s for pointing out something that we all understand now, and that is that the movement of the stock market, the stock market is much more volatile than you would expect from rational economic behavior. So if stocks follow predicted paths of earnings, then you would expect a certain amount of volatility because the earnings exhibit a certain amount of volatility. But that's not what actually happens. The volatility of the stock market is much greater than the volatility of the earnings projections. Shiller concluded that there is some kind of mysterious, irrational component to investing that is causing the stock market to become more volatile. This was the birth of behavioral economics. And what he is trying to say here, which is now accepted wisdom, is that people don't act rationally and evaluating the stream of earnings and cash flow. They make irrational decisions, and this causes the increasing volatility that's going on.
Let's talk about Jack Bogle, founder of Vanguard, champion of the low-cost index fund. What can investors today learn from Jack Bogle?
Stay the course. The most important thing, people ask me again, what's the S&P going to do this year? I say, well, look, that's not the right question to ask. The right question to ask is, what kind of plan do I have for the long term? So people stop me all the time in airports and say, what are we going to do? What's the S&P to do? I said, let me ask you a question. How old are you? I'm 35. I say, okay, you're going to live for 60 years. You're going to probably live 95, 60 more years. First off, what happens to the S&P 500 isn't going to matter at all to in the long run. They were down 18% in 2022. Nobody even remembers that. So the most important thing is to have a plan. Understand what your risk tolerance is. What percentage do you want to own? Set of a plan. In stocks, what percentage do you want to own? How much can you save? What is your risk tolerance? How much can you afford to lose? How much can you sleep at night? If you have 70% of your 401k in stocks, is that too much for you? So it's all about your time in the markets, how long you think you'll be in. It's all about how much risk do you want to take. It's all about the costs. Make sure you keep the costs low. And people say, oh, I'm paying 2% for a mutual fund versus 1%. What's the difference? And it turns out 1% over 30 years is a big difference.
What is one lesson you wish you had learned earlier in your broadcast career?
I wish I would have been a little more humble in the early days. And it's funny, as I got older, I got more humble. I got a little less dogmatic about things. I wanted to get out and tell people very early on what the perfect way to make money is. So I went out every night for decades with traders saying, "Tell me what the CBD is." And it turned out most of the traders, in a real way, did not outperform the market. Most of them did. I did learn about some lessons about investing in markets. For example, single stock trading. Jenny is always risky. Owning single stocks was very, very risky. That's why I went into index funds. And I think the important thing is learning to be a lot more humble.
The book is Shut Up and Keep Talking. The author, the great and one and only Bob Pisani, back here at the New York Stock Exchange. What an honor. Thank you, Bob.
JD, thank you very much. Great.
Yeah,
pleasure.
Welcome back to the show. You're watching Trading Stock, Hello, Taking Stock. You think by now I know the name of the show. We are live at the New York Stock Exchange. Iggy Iope joins us now. He is Chief Investment Officer at Theo. Welcome to the show, which is definitely called Taking Stock, I swear. It's nice to have you.
Yeah, thanks for having me.
I'd love to
I
get...
like trading too.
Of course, yeah, we like them both, of course,
Yeah.
without a doubt. First and foremost, can I get your reaction? We covered it here on the show last week. The New York Stock Exchange's impending plans, a 24/7 tokenization reality for traders of the future. What was your reaction when you heard that announcement?
I was really excited to see it, and more excited than, for example, the NASDAQ announcement, because what NYSE is trying to build, and we're on the floor of NYSE, so shout out to them. They're trying to build an actual decentralized exchange on chain, supporting multiple blockchains, and it's going to be atomic settlement, 24/7 trading, and instant settlement, and it's going to be accessible anywhere, and it's going to have tokenized stocks trading alongside digital assets in the same venue. By contrast, NASDAQ is basically keeping their existing infrastructure. They just had a little flag saying, "Hey, would you like to settle on blockchain?" But that blockchain is still operated by the DTCC, which is this old school technology. The whole financial system runs on tech that was built in the early 70s. And, it's time for an upgrade.
Talk to us first and foremost a bit more about your work at Theo. Iggy, your top priorities here for 2026, and how are you thinking about the broader conversation of tokenized equities?
Right, so Theo, we're going to launch tokenized equities as well. We're actually starting with tokenized gold, and we've got to acknowledge that gold is now just crossed $5,000. And gold is first to go on chain before equities because it's a much bigger asset class. And the pioneers that went on chain, they already built liquidity. It started about 5 years ago, and gold is already liquid on chain. So what we're going to do as part of our plan is we actually, today, interestingly enough, pure coincidence, but nice, we just launched for the first time in 6,600 years that humans have been using gold as store of value and a method of payment. For the first time, you can own gold with yield. For 6,000 years, it would have cost you something to store gold, to transport it, to use it as payment. You would take a risk, right? Somebody would come over and steal your gold. Now, the way we designed our product is this gold actually covers all the cost of storage, and it actually pays you a yield.
What can you tell me that you think is most up next for the world of tokenized markets? This is undoubtedly a lot of progress that has already been made, but I'm sure you've got some sense of new developments still to come.
Yeah, I think it's going to be regulation and liquidity, right? So like NYSE, for example, because their vision is much more forward-looking, is going to take longer to get the approvals than, for example, the NASDAQ, which is sort of like what I call tokenization theater, where you tokenize some assets, some financial asset, called real-world assets, right, RWA, and you put it on chain, but you don't actually use the chain, right? So our North Star at Theo, for example, is to go beyond issuance, right? So we actually build markets on chain that are scalable, that are liquid, and they're accessible anytime, anywhere, by anyone. So two things, regulation,
Sure.
and number two is building liquidity, especially building liquidity outside of the core market hours.
Iggy Iope, Chief Investment Officer at Theo, here making his Taking Stock debut. I've confirmed that is in fact the name of the show. Great to have you here. You're welcome back anytime, Iggy.
Thank you so much.
All right, time now for the
Right.
latest from Money 2020. Scarlett Sieber, take a look.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. because the headlines are great, the big dollars are great, but what's happening underneath the surface? So today we're going to be breaking down the fintech known as Upstart. Also happens to be listed here at the beautiful NYSE. The AI lending marketplace that turns risk scoring into repeatable, fee-driven cash flow. Upstart's core is AI underwriting. It prices consumer credit risk, originates loans via bank and credit union partners, and moves those loans to whole loan buyers or into securitizations, collecting fees all along the way every step. Think balance sheet light enabler first, lender second. The money map looks like this. Origination referral fees paid by partner lenders for each funded loan. Platform and servicing fees for payments, collections, and borrower support. Loan sale margins and securitization economics when loans move off the platform, that spread capture plus servicing rights. The model licensing and decisioning, banks pay to use Upstart's AI to lift approvals at comparable or better loss expectations. Recent numbers show the engine is running and it's running pretty darn well. Q3 of 25 rather, Upstart reported about $277 million in total revenue, up 71% year over year, including $259 million from fees. Originations were roughly $2.9 billion, up 80% year on year. And that GAAP net income flipped positive to about $31.8 million. On the funding rail, multiple 2025 ABS deals carried robust credit enhancements across tranches, signaling investor appetite for AI underwritten pools. This moat, data scale and model performance reinforced by real loan outcomes. Reality check though, credit cycles and funding conditions can compress approvals or push more balance sheet exposure. Unit economics have to hold in any weather, and that can always be a bit tough. So Upstart turns underwriting into software-style revenue. Every approved loan rings the fee bell. Every well-serviced portfolio adds a new line item. It's a lending economics with a SaaS heartbeat, and that's how Upstart and this fintech actually makes money. Is there any fintechs that you want to hear about and how they make money? Let's break down that P&L. Put them in the comments below and we'll see if we could feature them next time. Back over to you.
All right, with our remaining moment or so, we'll get you quickly caught up on what to expect for tomorrow. A jam-packed day for investors and traders alike. Of course, at 2 o'clock, we get the FOMC January decision on short-term interest rates, as Michael Reinking and I were talking about. We pretty much know how that's going to go, but all eyes will be on the 2:30 press conference from the one and only Jerome Powell. And in case that all weren't enough, after the bell tomorrow, earnings from Meta, Microsoft, and Tesla. 9 a.m. tomorrow, NYSE TV Live and FinTech TV Live, both here at the big board to count you down to the open. That's going to do it. Have a great night. We'll see you tomorrow. Woo!